You know, folks, the whole world is talking about Bitcoin. Want to know why? Maybe it's because Bitcoin rose in value over 150% last year, and this is just the beginning. Bitcoin is online investing that anyone can do. Visit bitcoinuniversity.org today. Take a master class. Download the Book of Bitcoin and take your investment portfolio to the next level. Visit bitcoinuniversity.org and discover all that a Bitcoin can do for you. That's bitcoinuniversity.org, bitcoinuniversity.org.
This episode is brought to you by LifeLock. The holidays mean more travel, more shopping, more time online, and more personal info in places that could expose you to identity theft. That's why LifeLock monitors millions of data points every second. If your identity is stolen, their US-based restoration specialist will fix it, guaranteed or your money back. Get more holiday fun and less holiday worry with LifeLock. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, folks. I'm Larry Kudlow. This is the Larry Kudlow Show. And by the way, you can listen to us on the Internet. You can live stream us on the Internet. LarryKudlowShow.com, LarryKudlowShow.com. During the week, please join us. Fabulous Fox Business Network. The name of the show is Kudlow. 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't reach us at 4, you can't watch it at 4, why, just text your favorite 9-year-old, and she will show you how to DVR the show. All right, let's turn to the stock market. Not such a great week after the record-breaking Trump rally a week ago. Let's see. Yeah, Dow's off 544 points. NASDAQ's down 607. S&P 500, 125. Corrections probably overdue. Let's talk to our experts. Stephanie Link. Stephanie Link is back. Wow. Chief Investment Strategist, Hightower Advisors, Head of Investment Solutions. And Ken Polcari, Managing Partner at Kace Capital Advisors and Chief Market Strategist at SlateStone Wealth. Stephanie, you've been dodging me. You've been avoiding me. You hate me. I haven't heard you in weeks and weeks and weeks. What's going on out there?
I've missed you terribly. Last time I was on with Kenny, you were sick, unfortunately. So we missed you. So we're off a little bit.
Man, I had the flu like you wouldn't believe. It came crashing down on my little head. But now you're back. And things still look pretty rosy. Anyway, you've been a bull, and you've been right for any number of reasons. The market did seem to like Mr. Trump and the prospects of tax cuts and deregulations. There are a lot of other things going on. Give us a quick rundown.
Sure. Well, it's been a busy last few weeks for sure, right? I mean, 2 weeks ago you had the election. Thankfully, we had an answer because we were all wondering if we were going to get an answer. You had the Fed cut 25 basis points as expected. You had China stimulus, which was as expected, but we got a little bit more detail. And then this past week, we had the inflation data, CPI, PPI, which were a little warmer than expected. I don't think anything to be really concerned about. And, of course, we had the dynamite retail sales numbers. We're running retail sales right now 4.6% year over year. And now I think the markets past week are kind of digesting what the Trump administration, what does it really mean for growth and inflation? And he's inheriting an economy, though, that's pretty good, about 2.5% growth. So there's momentum. He is going to be much more pro-growth. And if it comes at the expense of a little bit more inflation, I'm okay with that, Larry, because I will take faster growth and a little bit more inflation from an investment point of view any day versus the alternatives, because in that scenario, earnings can grow 8 to 10%. Companies have pricing power. Companies have margin expansion. So I feel pretty good. I think we're just pausing here this past week, but I think we're going to see a nice chase into the end of the year. $6.4 trillion of money in money markets right now.
Very good. Ken Polcari, I want to get your take on that, but I will say this. The Fed is cutting its target rate, but bond rates have actually gone up. Mm-hmm. So we closed the week, Kenny, at 444. I think it got as low as 360 or something. I mean, I don't happen to agree with all the Fed rate cutting. I think they should wait. We were talking earlier with Conrad DeQuatros, who's one of the very best Wall Street economists, and I want to see some mild deflation. I like to see prices come down for the middle class and the low income. I'd like to see that. I think the Fed and all those guys, all those fancy Keynesian models they have, I don't think they care for the middle class at all. Prices have gone up 20.5% in the last 4 years, blah, blah, blah.
Mm-hmm. Yeah, listen, I'm in the same camp as you. I agree. I don't think they should be cutting. I thought they were very aggressive in September, but because they were as aggressive as they were, I didn't think they should have cut in November, but they did. I don't think they're going to cut in December. I think both Neil Kashkari's been making those kinds of comments. We heard it from Jay Powell the other day, where suddenly, he's changing his tune a little bit. He doesn't really sound as nearly as aggressive in rate cutting as maybe he sounded in September. To Stephanie's point, could we deal with a little bit higher inflation? I think they're going to raise the target from 2 to 3%. And if they keep it there, that's one thing. But if it spins out of control again, that's going to be a whole other conversation. And I think that's where some of the concern is. I think that the bond market is telling you that I think it's sending you two messages. One, that the economy remains strong, but two, that it is starting to get a little bit more concerned about inflation rearing its ugly head. And I think that's the message you heard from Jay Powell on Thursday and Friday, where he said, he's not going to be in a rush anymore. And I was at a conference on Tuesday, the Yahoo Invest conference, and Neil Kashkari was one of the speakers, and he essentially said the same thing, is that the December rate cut is not baked in, it's not guaranteed, meaning, and that they have remained very data dependent. And that, I think that started for me to signal the change of thinking maybe inside the Fed. And then we heard that from Jay Powell.
Well, I think, when, as Stephanie put it, with decent growth at the moment, I don't think it's well-distributed growth, but I'm going to put that aside. Decent growth, 2.5% is what you're looking at, according to the Hotlanta Fed GDP now. But, profits are the mother's milk of stocks. And as Steph says, profits are still doing very, very well. I read Ed Yardeni's stuff. I read Ed Hyman's stuff. But Yardeni in particular has been very optimistic on profits, and he's been right. Mm-hmm. And therefore, I don't think you need the Fed to be adding to the money supply and lowering interest rates. I don't want that. Inflation is stubborn, kids. We look at the numbers. Inflation is not coming down anymore on this year-to-year basis, and it is up over 20% in the last 4 years. The middle class has been clobbered by the inflation tax, the lower income clobbered. But the rest of it is, Kenny, I think I don't need it because Stephanie's right. Profits are doing well, and the economy is still showing growth. I don't want them here. Larry Lindsay, think about this. Larry Lindsay, who's been critical of the Fed, he's a smart guy, former Fed guy himself. He says he doesn't want the Fed to pour gasoline on the fire. You still have a sticky inflation, kids. That's all I'm saying. Go ahead. Knock me down.
No, I think you're right. Steph, what do you think? I think he's right.
Yeah, look, I think you can't just look at just inflation. The consumer has actually been pretty resilient, and the reason for that is because the labor market had been tight for years. Wages were going up 4 or 5%. Now maybe we're a little bit more in balance in terms of the labor market, but I look at the weekly jobless claims on a 4-week moving average. You're running at 240,000. A recession is 350 to 375, and wages are still going up, and inflation has been coming down. So I think the consumer is in better shape. Think about this. Not only was retail sales better than expected, but we had an ISM services number a couple of weeks ago that was almost 60, right? We know 50 is expansion. It was 57.4. So that is huge. So the consumer is, we always talk about this, Larry and Kenny, it's 75, consumer 75% of the economy, and services is 70% of consumption. So those are the two things you root for. And then, oh, by the way, throw on this manufacturing renaissance that we have, anything tied to the grid and data center. So not all is perfect in the manufacturing world, but that sliver is a big sliver. That's a $10 trillion opportunity to build out the grid and power and data centers over the next 20 years. So you do have some really positive things that are happening overall. So, yeah, does the Fed need to do more? Maybe another 25. Maybe the neutral rate is 4.5. I think we can handle that, though.
All right, let's take a quick break and catch our breaths after all this dynamic bullishness. We got Stephanie Link, Hightower Advisors, Investment Solutions. We got Kenny Polcari, Kace Capital, and SlateStone Wealth. I'm Kudlow. We'll be right back with more on stocks.
This is the Larry Kudlow Show.
This episode is brought to you by LifeLock. The holidays mean more travel, more shopping, more time online, and more personal info in places that could expose you to identity theft. That's why LifeLock monitors millions of data points every second. If your identity is stolen, their US-based restoration specialists will fix it, guaranteed or your money back. Get more holiday fun and less holiday worry with LifeLock. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.
This episode is brought to you by Etsy.
Oh.
Hear that?
Okay. Thank you.
Etsy knows these aren't the sounds of holiday gifting. Well, not the ones you're hoping for. You want squeals of delight. Happy tears.
How did you?
And spontaneously written songs of joy.
I am so happy. Oh, yeah, oh, yeah, oh, yeah.
Okay, the song needs a bit of work, but anyway, to get those reactions, make sure everyone on your list feels heard with handmade, handpicked, and designed gifts from small shops on Etsy. Gifts like personalized jewelry, custom artwork, cozy style items, vintage pieces, and home decor to celebrate all of your favorite people and their specific kind of special. For original gifts that say, I get you, Etsy has it.
Now, back to the Larry Kudlow Show.
We are talking stocks. We got Stephanie Link, Chief Investment Strategist at Hightower Advisors and Head of Investment Solutions. Kenny Polcari, Managing Partner at Kace Capital and Chief Market Strategist at SlateStone Wealth. Let's see. Stephanie Link, this one's perfect for you. You buying Bitcoin, 91,288.46 close on Friday. 91,000 Bitcoin. And we just lost Stephanie. So I'll just ask Kenny Polcari the same question. Ken Polcari, you buying Bitcoin at 91,000?
I'm not buying it at 91,000, but I will say I bought it when it blasted through 80. I did buy some at 80, and then it blasted up through 90. I didn't. I'll wait for it to pull back. I just buy little bits and pieces along the way. I've been doing it for a number of years, right? I'm not buying an $80,000 coin. I just, like I said, I buy it in bits and pieces, and I dollar cost average it. But I did jump on the bandwagon when it blasted through 80, but I did not at 90.
Yeah, Stephanie Link, you buying Bitcoin? All right, we lost her again. We'll try to get her back. Something's going on. Kenny Polcari, the other thing is worth conjuring. Gold prices falling back now. Gold, let's see, down almost 5% last week, 25.62.
Yeah.
Let's see, it got over 2,700, I think, at one point.
It's 28. It's 2,800.
Okay, 2,800. How do you read that? In some sense, gold going down means the real value of the dollar is going up. There seems to be an election play here that Trump is good for the dollar. He wants it to be the world's reserve currency. And the talk that Trump's policies will be inflationary, I don't think are correct. Among other things, if we start producing more oil and gas, it's going to bring down prices. Gasoline might drop to $2 a gallon for all we know. So what's the gold signal mean to you?
So I think going into the election, it was much more about fear, uncertainty. It was about global unrest. It was about people going into that safe haven trade, right? The U.S. election was chaotic. It was contentious. It got really ugly. We all know that. And I think that played into people's fears. And then we saw We saw the dollar was kind of trading back and forth. It was weak there for a while. It was giving support to gold. And then once the election hit and it was very clear, it didn't drag out for days. It was over within 15 hours. It was decided who it was going to be. And then it took another 3 days to decide the Senate and the House, I guess. But I think the pullback is now more relief, right? That people are going, okay, we got that out of the way. We now know what we have. He'll be good for global unrest. I think that's at least the message that it's sending you. And they're also, it was a relief trade, right? I do agree with you. I'm not sure that his policies are going to be as inflationary as people are talking, but that's yet to be seen.
Well, I got one on the inflation. How about $2 gasoline?
Yeah, I think $2.
$2 gasoline, which is profoundly counter-inflationary.
100%.
And by the way, supply-side tax cuts and deregulation is counter-inflation. I think we do have Stephanie back, so I'll let her weigh in. I mean, I understand Wall Street yabbers on about inflation, but with gold coming down and Trump is basically aiming for $2 a gallon gasoline, that would be, that permeates lower oil prices permeates the entire economy. That's counter-inflationary.
Yeah. Absolutely. And gasoline is down 15% year over year. And it goes right back to my whole point about the consumer. The consumer is actually doing better than people think. We are a nation of spenders, Larry. You know that. Whether we have the cash or they take on the debt, we just do. It's always been a bad decision to bet against the U.S. consumer. And that is really the livelihood of our economy. So that's what we root for. But I think that I don't understand gold. I mean, gold, you would think it is it a towel on inflation? I don't know. Maybe it's just diversification. Maybe it's just, anticipation of a dollar maybe kind of coming down. I don't know why the dollar would come down though anyway, but I've never really made a lot of money in gold. And in terms of, just the overall economy at large is just, we're doing better. We should embrace it. There are a lot of themes out there that I like. Housing, we talked about the grid. I like financials a lot. We haven't even had a net interest income cycle yet. I think that's a 2025 story. And deregulation and M&A and capital markets, and that group is very, very cheap. And energy, it's been hard. But I do not think under Trump you're going to see drill, baby, drill. I don't think the companies want to do that. They'll have a balance. They will continue to produce, but they will also return that cash to shareholders. And by the way, we all know that they are minting cash. Anything over $35 oil, they are minting cash because that's their break even.
Liquid gold, Steph. Liquid gold. That's what he calls it.
That's right.
Liquid gold. I just love that. Liquid gold. Kenny Polcari, Stephanie mentioned in financials, the banks, particularly the big banks, have done very, very well, which is a good sign for the economy, I think. Actually, the KBW Bank Index up 40% year to date, just about, it's not quite twice what the S&P is, but it's close. You like banks?
I do like banks. A lot. I own them. JP Morgan, Bank of America are my two favorite banks. And I'll continue to own those. But look, even the XLF is up 35%, right? The S&P, the financial sector is up 35%. So yes, trailing a little bit the banks in general, but it is still a positive sign. And yes, I like financials. I think it is a place you have to be, and I continue to look to. I'll buy them on pullbacks for sure.
What's the downside? Is there any risks? It's all very euphoric, and we've had a hell of a bull market. What is there to worry about?
Oh, good. Steph, you want to go first?
I mean, in financials or overall the market?
Just overall.
Oh, are you kidding? I mean, I worry about like 10, 15 different things. I mean, I worry when I don't worry, right? Because that means we're complacent. But obviously geopolitical, a big part of it is, can China get themselves out of the mess they're in? Because we really do need them to grow for the global growth to continue. I do worry about a lot of high expectations and high valuations, but that's why it's so important to look at the market at large in terms of other sectors that are cheaper, other stocks that are cheaper. I hope 2025 is stock pickers market. I know Kenny agrees with me on that too, because there are a lot of stocks that are cheap out there, but it's not as easy as it has been.
Yeah. And I think there was an article that came out on Bloomberg talking about there's some Wall Street analysts that are revising 2020 forecasts a little bit lower, which isn't necessarily a huge positive, right? You got to be a little bit concerned if you start that pick up. But to your question, Larry, the geopolitical stuff is a concern, and for me, inflation, if it rears its ugly head and they're not able to control it, I think that's the concern that I have going in, and that's just my fear. I worry a lot about inflation.
All right, great stuff. Listen, kids, I appreciate it very much. Stephanie Link, Hightower Investors, Investment Solutions, Ken Polcari, Kace Capital, SlateStone Wealth. Very optimistic. I'm Kudlow. On the other side of the break, we're going to talk some money and some politics with John McIntyre and Liz Peek. I'm Kudlow. Be right back.
Janine Pirro here for Colonial Metals Group. Colonial Metals Group helps Americans protect their future with the most trusted store of wealth in human history, physical gold and silver. If you're retiring or retired, go to colonialmetalsgroup.com/Pirro for your free Janine Pirro Colonial Metals Group Retirement Protection Kit, or call 800-965-8004. 800-965-8004 now to receive a free home safe and up to $7,500 in free silver.